Hello, everyone. Welcome, and thank you for joining today's webinar entitled 2016 Retail Banking Trends and Predictions. Before we begin, I'd like to go over some housekeeping. This session is being recorded, so after this session ends, you'll be able to return and rewatch this webinar about a half an hour after it concludes. And you can send in your questions at any time during the webinar using the Q&A panel you have, so feel free to do that at any point during the webinar. At this point, I'd like to introduce our speakers for today. Jim Marous, publisher of the Digital Banking Report and co-publisher of the Financial Brand, and Stephen Luong, Director of Product Marketing here at Kony, Inc. Jim Marous is an internationally recognized financial industry strategist, co-publisher of the Financial Brand, and the owner and publisher of the Digital Banking Report. Marous advises on innovation, portfolio growth, customer experience, marketing strategies, channel shift, payments, and digital transformation within the financial services industry. As Director of Product Marketing at Kony, Stephen Luong is focused on delivering exceptional mobile experiences for customers. Steve is a technology veteran with experience in brand management, product marketing, strategy, and marketing operations. He has held various leadership roles focused on mobile applications, information management, endpoint backup, file sync and share, and server hardware solutions. And with that, I'll hand it over to Jim to kick things off.
Thanks a lot. Glad to be here today. It's a fun situation to be able to share some of the insights that we collected over the last couple months around the 2016 top retail banking trends and predictions. The report itself has been compiled with the help of close to 100 global financial services leaders, including bankers, credit union executives, industry analysts, advisors, authors, and fintech leaders from Asia, Australia, Africa, North America, South America, and Europe. What's exciting about this report, it is not only the largest one we've ever done, it's 82 pages with 29 charts, but it's also the most number of people that we've ever had participate in our crowdsourced interview process. And this is the fifth consecutive year we've developed the report and surveying people across the industry about what they think is going to happen in the coming year. As we look back to 2015, we found that it was highly accurate, predicting advancements in digital delivery, mobile design, use of analytics, innovation, and customer experience. Our expert panel was a little bit too optimistic, I could say, around their projections around mobile payments, industry consolidation, and contextual engagement, however. But I would say they probably hit around a 750 to 850 batting average, so you can't get much better than that. Hopefully this year will be as strong. As you can see, our trends and predictions for this year, our top 10 were an assortment ranging from the combination of fintech and traditional banking organizations to removing a friction from the customer journey, working with data more effectively, developing a better delivery strategy. Again, the panel doubled down on digital payments and saying that there can be an expansion, which I think maybe they were a little conservative and said, there's going to be an expansion, but they didn't say there's going to be a conversion to every payment type to mobile. The execution on innovation, exploring advanced technologies such as the blockchain and AI and robotics and even authentication. The emergence of a new breed of banks, the challenger bank breed that would include a couple of the states as well as several in the UK. The need to mine new talent and the responsiveness to regulatory changes. You'll see on the bottom of each slide there's a bit.ly link. That is a bit.ly link for the report itself, and it's currently available for purchase and immediate download. As we move on, the first and by far the most extensive projection was the platformification of banking. I really have to give Ron Shevlin credit for the terminology platformication. But as you can see, what he really was talking about was the combination and the partnership of banks and fintech firms, and that they will partner more than ever in 2016, leveraging the bank's advantages of scale and stability and trust, experience in navigating regulations and access to significant capital, while the fintechs would also leverage their advantages in the marketplace. So what we're really looking at is pretty much taking the benefits of what the fintech firms have and having banks start to use them as being the way to deliver better services to the consumer. If we look at the fintech strengths versus banking weaknesses, what the banking industry is looking for is the absence of legacy software and systems. And this is probably the biggest challenge in the banking industry today with everything we're trying to do. We're actually trying to build a digital banking organization in most cases around technology that was established in the 1970s. What we really have is a situation where a lot of the larger banks, for sure, and many of the other ones are being built on technology that was from the 1970s when ATMs were just being introduced. And we all know how much has happened since then. So the fintechs have a bit of an advantage in that they don't have this legacy systems and software to work with. They also have the capacity to innovate. They have less regulatory pressure. There's certainly a mentality of agility and speed to market, while certainly the banking industry doesn't have culture that is suited to rapid change. There's a technology expertise of the fintech firms, and they're able to improve current products. They can look on a clear vision of what we offer. And so there's a great advantage of what the fintech firms can bring to the banking industry in a partnership situation. The Economist Intelligence Unit also found that banking strengths were what fintech firms are looking for. Number one, I think the biggest challenge that fintech firms have had is scalability. They don't have a very big existing customer base. They don't come with a built-in reputation of trust and stability. They don't have experience with regulatory requirements. So the banks can bring that to the partnership. There's also a full line of banking products. And probably what we're finding more and more is the advantage of deep financial pockets, in that the banking industry, the legacy banks are really able to bring their dollars to the table and say, we're gonna help you make headway and introduce your products. So I think what we're going to be looking at, if you can envision a circle with the consumer in the center, and then with all the products around the outskirts, so mobile wallets, retail investments, transactions, mobile payments, savings, and to investments and insurance. And then the bank will be able to provide the best of breed of what they have and what the fintech firms offer. And what they can do is they can maintain the customer relationship. They can leverage their power of trust with the consumer. And most importantly, they can then reduce their own costs, because if the partnership is built the right way, be it in the lending or the deposit side, what they'll be able to do is release some of the expenses they currently have and have them actually be borne by a much more efficient system of technology. As we move to the second major trend for 2016, I think the second major trend is removing friction from the customer journey. Obviously, the digitalization of the industry and actually of the consumer is impacting all industries, including banking. It's impacting the way consumers research their choices, buy their products, expand their relationships, and determine their loyalty. The winners in this battlefield will be those that really simplify the consumer's life. So what we find is no longer adequate to wait until a consumer or member walks into a branch or decides to purchase a new product via a smartphone. Instead, banks and credit unions really need to engage consumers at every stage of the purchase journey, not just because of the immediate opportunities, but also the desire to create loyalty and have cross-sell capabilities. And I think as we look to this, what we have to do is make all of this simpler. We really make, from the moment the consumer walks in the door to the time they leave us for whatever reason. We make the challenge more and more difficult for them. And what we end up doing is even when they try to open an account, the process is very cumbersome. To make that even worse, we make them use multiple channels to get there. So when we get research such as was done by Bain & Company with regard to digital channels versus branches, and this was done back in the last part of 2015, we find that, to put it lightly, digital channels delight and branches disappoint. And it's more likely for people that are digital-based and work in digital channels to be happy with their engagement. Now, there's a lot of reasons for that, and we can talk about cart versus the horse. We can talk about, the challenges involved and the ability that we still need to be able to provide this on every level. But as Brian Solis said on the previous slide, what we need to do is it's now incumbent upon the banking industry to create a mobile-first experience, one where we design an entirety of new set of products that will lead to new types of relationships. It actually is going to be is why banking industry is actually partnering with design firms. What we need is and a lot of people criticize my use of this, but it's being overused, is the Uber of banking. Let's make it simple. Let's look at the platforms such as Square Cash, where it takes 2 clicks to make the relationship with the consumer. Let's look at some of these easy transactions that we can make even easier. Steve, I know that Kony's really big into the whole simplification of the customer journey. Do you want to add anything here?
Yeah, Jim. I think that this is a really key prediction, and as you quoted Brian earlier, he talked about how user experience is at the center of a lot of it, and we hear that every day from our prospects and our customers, and continuing to change the expectations that they have, and they're experiencing simplicity in other areas and through other apps that they're using, and so they have the same expectations, if not more, for banking. And whatever we can do to minimize processes that might, require in-person in the branch or 30 minutes of paperwork, reduced to minutes and seconds by taking advantage of like the camera on the phone and things like that. Those are all things that really delight the customers, kind of like you said. So I think it's really a key prediction.
Yeah, I think what's interesting, too, is when we break apart this prediction, what became very clear is I would say that over half the crowdsourced panel that gave input on this prediction said that the major flaw that we have in the banking industry right now is that the new account opening process is so cumbersome on the mobile device. There's a number of firms that have done research on this beyond ourselves, and the digital account opening process is going to be where we're going to see a big change, because we're really making it so difficult to have a consumer open an account with a mobile device. And we're making it so there's so many steps. They sometimes have to come in the branch to fund the account. There are just a lot of things that have to happen. I think a lot of the panel thought that this is where we're going to see a very big change next year. We're going to see the ability for more and more banks to have a very integrated, simplistic process. And I think, as we mentioned, the expectations are being set by industries outside of banking. They're being set by the Amazons, the Ubers, the Airbnbs. They're being set by the Googles and the firms that are really making it so you can have a one-touch solution. I think when you look at the Fintech firms, the major advantage that most Fintech solutions have is simplicity. I think that's really what we have to look at as a banking industry. When we look at the third projection, we look at making big data actionable. As consumers demand more and more out of their user experiences across industries, banks and credit unions need to develop strategies that will use the data to better understand and service consumers at all stages of their life cycle and in all channels. The result will be lower cost to serve, increased sales, and a greater level of loyalty. And I think what we have to look at is realizing that when we're talking about making data actionable, it's not just developing reports in the hindsight of talking about what we've achieved. It's really using data to predetermine where the consumer is going to be going next. So when we make data actionable, we're looking at transaction data. We're looking at behavioral data. We're looking at where they are even. and maybe locational data to say, how can we serve them better? And how do we understand the needs of the consumer? Unfortunately, the consumer's confidence in the banking industry is really low. Only 20% of the consumers have a belief that the banking industry understands their needs. And when we're looking at what the banking industry or what the consumer is looking for, what they're looking for is they're looking for their financial institution to know them, understand them, and to reward them. And that's not rewards as intangible rewards, but I think what it really is it's looking at the fact that if you know your consumer really well and you understand their needs, then you can give them a prediction as to what they need to do to be more financially secure. Our friends at Celent provide a really good chart of the business drivers of predictive analytics. I mean, this is actually a couple years old, but we found it to be very important because as you're looking as a banking industry at the key elements of why you need predictive analytics, and again, big bank, small bank, credit union, whatever industry you're in or whatever size organization you are, you need predictive analytics to get better customer insights, to give a better customer experience, to do much better channel execution and a business strategy, to manage risk better, and certainly for marketing. John Wobbs from Casasas mentioned the fact that, this coming year is going to be a year when big data and marketing come together for better experiences. And when you're looking at better experience, sometimes we have to remember that as an industry, we do a really bad job on the basics. I'm a small business owner. I'm also a consumer banking customer. When I go into my bank and if I have a problem with my personal account, they don't have a way of knowing that if I'm not satisfied, I could be putting my small business account at risk with that organization. The same thing's true with commercial. The same thing's even more true when you look at mortgages and credit cards because of all the silos. So how do we make it so that your organization understands your consumer better and give them an idea of what they should do next? A report by Gallup last year said that over 50% of the consumers say that they have gotten an offer or a product was sent to them that was not at all relevant to what their needs are. In many cases, we were offering them the same product they already held or a product that was completely out of the realm of what they needed to do. So we were sending equity credit marketing materials to a person that didn't own a home. So what we really want to do is we have to be looking at not only understanding the consumer from the balanced level, the type of things that we want to know, but we need to use data to help the consumer do better on their own. So really what we want to do, we have to deepen the engagement of both customers and of employees through the use of real-time access to actionable intelligent tools so that they're designed to make the consumer's jobs and our employees' jobs easier. And the key here is not just using data for analytic and post-account opening analysis, but really using it to help the consumer. The next trend is the introduction of Optichannel delivery. I have a lot of friends who kid me about this because they're saying, we hardly even understand the Omni-Channel, let alone Optichannel or multi-channel. But it's really time for financial institutions to respond to the changing behavior of consumers, delivering products, services, and financial education through both physical and digital channels. We need to really integrate and optimize channel delivery to bring value to the consumer. So what I mean, what the panel also means, when they're talking about Optichannel delivery, they're talking about not just making it so you can do the same thing on all channels. That's not optimal. What is optimal is to help the consumer find out what channel is best for any of their behaviors. So what we really are looking for is, for instance, if I have a challenge with my credit card, I just recently had some fraud on my credit card, the last thing I want to do is to type in information in my mobile phone. But if I'm on the move or I'm on vacation as I was last week and this all happened, I want to push to click to either talk to or connect with in a video way on my cell phone. How do we do that? And how do we make it so the consumer knows the best delivery channel for what they need? If the consumer needs their balances, why are we making them log in to their mobile device with all kinds of passcodes? Why aren't we making that easily accessible? That's optimal delivery, Optichannel delivery. So the majority of consumers, 65%, are multi-channel customers. So we need to find ways to address their needs. And when we're looking at Optichannel delivery, we have to remember we also may be eliminating or reducing the way we're delivering services. Brett King mentions that we are going to start to see the end of traditional bank products and the way we deliver them. What we're going to see is the integration of things such as lending products within your mobile device as to where you are in a store. So if you want to purchase something in a retail store, we're going to give them the consumer the ability to just push and say, I want this, can you fund it? We're already seeing in Poland and a couple other places the ability to develop 30-second loans, personal loans, for financing of things. We also, how can we use wearables or how can we use other channels to make it easy to save, a push to save? Or how can we get emergency cash at a grocery store without having to open up a reserve line of credit? So what we're looking at here is again, the optimal channel for different things. Now the challenge here, and this is again a Selenium chart, they've done some really good work talking about Omni-Channel delivery. And what they found was that bankers overall didn't really understand what they meant by Omni-Channel. Now, they're pretty sure, 63% thought that they are Omni-Channel is about ensuring customers have a consistent experience on the channel they use. But is it really supposed to be consistent or better than other channels? In addition, ensuring channel integration is seamless transition between channels. This is a big problem in the industry. For instance, if I go into most financial institutions today and I've started my account opening process on my desktop computer, and I've decided to say, you know what, I don't want to finish it here. I got to get going. I got to do something. Let me see if I can continue it on my mobile phone. Number one, most institutions aren't going to give you that capability. But what's even worse is I get into the branch, and in 95 to 100% of the instances, if I've started it on a computer, the branch is going to give me a reason why it's better to start over. Now, they'll do it in such a way that the consumer feels they're getting better service. But the reality is, in most cases, it's being done because the branch is rewarded for closing new deals in the branch. They're not rewarded if they open an account digitally or the consumer opens an account digital. So what they're doing is they're actually making it so that the records will show that the account was initiated and opened in the branch because that's our incentive program. So we actually have systems in place that make it hard for the consumer to get the best on the channel delivery.
Hey, Jim?
Yes.
Yeah, I think that when I think about what you talked about Optichannel delivery too, I love how it ties together some of the other predictions, like when you talked about making big data actionable or things like that, where that's how you're going to enable, or that's how banks can enable finding the optimal channel at any given time for the consumer, and that then plays into the customer experience that they have. And so I think it all ties together really well.
Yeah, I agree. And, I think what we really have to do is say, how do we make it, again, it's simplicity, it's using data, and it's really looking at, how do we make the entire journey of the consumer easier? Expansive digital payments. As I said, 2015 did not exactly come out the way most people said. You wouldn't know that if you're a banker that reads all the press clippings out there, because we're always talking about mobile delivery and how we're going to be having mobile payments all over the place. But in reality, mobile payment usage continues to remain lackluster. Not sure if newly announced partnerships and enhancements will drive increased usage, or if the acceptance will actually need a major event such as a data breach to move the needle in digital payments. I don't know what the situation is with people in the audience today, but I know in my situation, even EMV is not being implemented very well. I'm seeing the machines out there, but I went to 3 places yesterday, and 2 of the machines, they said, well, don't put your card in there because it doesn't work. Well, if it doesn't work when you're sliding the card in, I think we have to remember it's certainly not going to work if you're trying to do mobile payments. I think the Samsung Pay is an interesting bridge where you're really doing more of a card payment, but with a mobile device. I think that we may see some growth in that area because it really is a really short learning curve for the consumer. But things like Apple Pay, I'm tired of looking to figure out where I can use it. I know I can use it at Panera. I know I can use it at Walgreens, which is by far one of the best experiences at Walgreens because everything they do is digital. But I can't do it at CVS or other places, or certainly not at gas stations. Chris Skinner from the Financial Services Club in the UK said, for the past few years, a number of technologies have been rising into a perfect storm: cloud, big data, mobile apps, and more. In 2016, the iOS storm will hit as we see a massive focus upon mobile wallet development to increase usage from Chase, Samsung, Apple, and Google wallets. And even today, we saw an Asia Pacific bank say that they're actually going to develop a platform that is going to do more than what currently is able to be done with Apple Pay, and they're going to compete with Apple Pay. So I think we have to look at that and say, how do we move people to the next level? But until we have a value proposition, until we make it easier for the consumer, again, they're not going to change. They're certainly not going to change their way of doing business. So as we look at this, we see that over time, Jesus shows that payment preferences have not changed very much from 13 to 15. And, we've seen debit card go down a little bit. We've seen credit card go up a little bit. We've seen cash, of all things, actually go up. So oh, by the way, the little sliver for mobile payments is extraordinarily small. We're seeing it as between 6 and 11% of payments. So I think overall, we need to be cognizant of the fact that we need to do some of the consumer education. We do see use of mobile for different purposes, and but we're going to need to explain to consumers the benefits, certainly from a security standpoint, of using mobile payments. So when we get into the next major trend is executing on innovation. The key word here is executing. With the perceived threat of disruption in retail banking growing due to the influx of new Fintech firms, the banking industry is really actually doing a very good job at aggressively responding to these threats by increasing the investment in innovation. And I think what we've seen is that more and more banks have an innovation strategy. More and more banks have a better understanding of how they want to improve their innovation strategies overall. The change in investment, innovation investment by area of the bank, what we're seeing is that channels, 84% of the banks research from EFMA, Emphasis, and Finacle found that 84% of the banks are increasing innovation investment for channels, 82% for customer service and experience, and 67% for products. So there is an increase in investment. The challenge here is how do you execute against that? So what we really want to do is, there's been a lot of hype around innovation, and banks are investing heavily, but the consumer has yet to see much of the benefit of this. The struggle is to access consumer data through the bank's legacy systems and be able to use these in such a way that it makes it easier for the consumer to do banking. So again, it's all about simplicity. But I think what we have to do is say, a lot of banks are creating innovation incubators and all kinds of ways of improving their innovation strategies. But we're still an industry that fears failure and doesn't want to risk very much. So we have to balance those things. But if we don't, we're going to have to certainly get partners that will. The next major trend is exploring advanced technologies. And this is our crowdsource panel. Overall, we're a group of people, as I said, from across the globe. A lot of really good good visionaries. And I think with the digital connectivity of everyone to everything anywhere and at any time, and the ability to analyze and use data in all aspects of daily life, this provides both opportunities and challenges. How we respond to these changes will actually determine the success of both institutions as well as the industry as a whole. I think when we look at the different types of advanced technologies, and we're really talking in some cases many years in the future, in some cases fewer years in the future, I think what we'll see is when we start looking at digital transactions, making it so that there's digital storage of everything, and that there's also the ability to make sure that all documentation is digitized. We're going to see this in the shorter term. We're starting to see this more and more in the banking industry because it's not only better, it's cheaper, and it's safer. When we start looking at robotics and services that are more using artificial intelligence, things of this nature, we're a little bit further out as far as the tipping points, which means the ability to say, it's really taking hold in it and it's moving quickly. When we look at the Internet of Things, the people that were researched by the World Economic Forum thought that the Internet of Things is something that will hit the tipping point of 2022. Well, this actually came out before the Consumer Electronics Show, but if you read about it on the papers, that Samsung and some other companies are developing refrigerators that can do banking for you and can do purchases for you. We're already seeing Amazon make it where there's digital technologies where you push a button on your, let's say, your washer or dryer and get new supplies delivered to you automatically. We're finding different ways to do this, and the banking world is going to be the center of this because it's payments and this integration. So when we look at this, when we looked at in our guide the different types of advanced technologies and what banks are going to be exploring, I think we are looking at a lot of different things. And so we're looking at things like the blockchain, something that is still mystic to many. It's interesting that in 2014, our panel talked about Bitcoin. Last year, Bitcoin and blockchain were not mentioned at all, and then blockchain has again become a very hot topic with a lot of the bigger banks doing more and more with the blockchain and trying to see how it can be used. But I think we're also looking at things like robots and artificial intelligence. We're looking at Internet of Things that we talked about in the report. We also talked about on the report about digital authentication. This is going to be a short-term, more in the near future scenario because we're seeing more and more security risks out there. And so what we need to have is the ability to do digital authentication. And so you really want to find a way to take some of these technologies. And I always use the analogy of the technology game of roulette, where, in a casino, if you've been in a casino, that you always hear the cheers and the yelling at the roulette table. So if you're staying way far away from it, you're not going to know what's winning and losing. The key is to go over to the table, see how the table flows, put small bets down on the advanced technologies. It doesn't have to be a big bet, but put a small bet down to get an idea of who are the winners, who are the losers, what's the way it's going to flow. Because when these different technologies take hold, and this is brought up in our report, when the technologies take hold, you don't want to be on the backside looking in, and you want to be able to really understand what the winners and losers found out along the way. When we look at the next trend, we're talking about the emergence of a new breed of banks. Now, this is something that started in the States a number of years ago with Movin, Simple, and GoBank, and now is really becoming a very hot item globally. The UK's regulatory board has changed a lot of the regulations and made it so that new challenger banks such as Atom and Starling have been able to make headway and are starting to introduce new ways of doing banking. The key here is, as we talked about at the very beginning, is what kind of scale can these organizations get? How can these organizations really make an impact? And they may take other organizations to get them there. I know Movement's had a lot of partnerships that they're building globally to take their platform and showing other banks how to use their platform internally. And so we look at two of our friends, both David Breyer and Duana Bloomstrom. And Duana, for instance, said that 2016 could be the year that one of the big tech giants show their hand in financial services. It could be Apple, it could be Google, it could be something like this. And if it occurs, it could be a major change that will make legacy firms really have to dig down into the new data and relationship-driven business models. So again, going back to the analytics and being able to say, how can we use these technologies? And so it could be a big technology firm, or as David Blair said, it could be a smaller firm, a challenger bank, while still in their infancy, are set up with the consumer at the heart and the technology in the brains. They have no legacy, no wrongs to right, but equally no customers yet. They are not to be underestimated, but 2016 will determine how much of a success they are. I think what many of our panel believed was that challenger banks would be a major item to watch by legacy organizations and to see if we want to partner. We've already seen BBVA partner with one of the challenger banks in the UK to build a better model for lending, a better lending platform, and to expand their market share and to expand to a global organization in the UK where they really don't have much of a presence. So what is this all going to take? It's going to take some new thinking, some new human resources. The challenge we have right now is that a lot of the things that we need to do in the quest to modernize our technology is that there's a need to hire the right talent. And this banking industry and the banking organizations compete with other industries for the same type of people. I'd have to guess that banking probably is not viewed as the most exciting career opportunity, especially for millennials. So we're going to be going against some headwinds. The attraction and retaining of top digital talent that can support both the internal culture of innovation as well as a lot of the technology changes is going to become a priority in 2016. As you can see on the slide, if you look at the attracting new talent, it went up one spot from number 5 to number 4 this year in a research that was done by Temenos. I think what's interesting is if you look at 1, 2, and 3, IT modernization, innovation, and channels, I think you could very easily argue the fact that every one of those are going to need the number 4 spot to help out. They're going to need the new talent. Finally, the 10th trend, and it was probably the lowest talked about, but I think it's probably because it's one that's the most common, ongoing every year, is that basically the overarching priorities. PwC found that from CEOs, the overarching banking priorities for the future success are finding growth in a challenging environment, delivering productivity, and getting ahead of the risk and regulatory management functions. So what we really need to do, we have to be aware that it costs a lot of money, but we've got to find a way to work within the regulatory constraints to say, how can we be more innovative? How can we make these into opportunity rather than challenges? I think it's important. In the UK, they've had some opening of doors that allow the Fintech firms to actually make some headway and become these new challenger banks. But in the United States, what we have to do is in many cases, deal with more constrictive regulations. And so what we have to worry about is over-regulation. We have to find out, also, we have to find out how do we respond to a rising rate environment. Now, that was what we thought 2 weeks ago. It may come back out again with everything that's going on in the marketplace. But I think it's important to know that we're still going to have to do these basics. And we have to do it in a way that is not just answering the call, but going beyond the call. As I said, the report is a very big report. It has over 20 contributing consulting firms that helped us with some of the research. We have 100 insights from more than 90 industry leaders that are global in nature, of a lot of names you recognize. It's 82 pages with 29 charts. We are offering $100 off on the report right now, and again, we'd really be remiss if I didn't thank Kony for all the support they've given in the collection and compilation of the data, and also the ability to distribute this at a lower cost than would be possible otherwise. So, again, there's a bit.ly for the Banking Trend Report, and I'm now going to hand it over to Steve.
Thanks, Jim. I'm really excited to see how this year's predictions turn out, and I did have a chance to read the whole report, and there's some really great insights, and one of the big things, like you called out, is that it's not just from one person, but there's a whole panel of crowdsourced information and just a lot of good points of view from a lot of folks out there. So I wanted, for those of you who may not be as familiar with Kony, I wanted to take a few minutes to share a little bit about who we are, briefly touch on a few of the trends and predictions that stuck out to me, and talk about what Kony's approach is for the retail banking space. So as you can see, our mission is to rapidly and continuously deliver exceptional mobile experiences with exponential outcomes for our clients, and not just our clients, but also their customers. We were founded in 2007, have over 300 enterprise customers, and published over 1,000 enterprise apps. And so we're the largest pure-play enterprise mobility player in the market, and we're a recognized leader in enterprise mobility solutions by folks like Forrester. We're in the wave there, Gartner, Magic Quadrant, Ovum, and others. And we've got experience across a lot of different industries, including healthcare, retail, human resources, and others. But one really key area of proven success is with financial institutions, and that's why we're here talking to different banks and sharing about what's going on in the industry. We serve over 30 million mobile banking users across 38 countries, and we're continuing to grow very rapidly. And we don't have time to talk about all 82 pages of the Trends and Predictions report, but there's a few quotes that really stood out to me. And so the first one, when you're talking about the platformification of banking and considering the implications of it, I like what you wrote here, Jim. By offering these new and existing services under one roof or as part of one app, banking organizations can retain customer loyalty through lower costs and a wider selection. And when I think about that, with banks becoming the hub of distribution for a broader range of solutions, I think the mobile app is really going to be a place where a lot of solutions are going to converge for delivery. And we're already seeing some of it. One example, recent example from a customer of ours was that enabling things like personal financial management tools like PFM within the mobile app allows for a single place for consumers to manage all of their finances. And mobile payments, digital payments, as you discussed earlier, is another example of that. And another point that you made that really rang true to me was when you said this about removing friction from the customer journey, that for the average bank, the most critical first step is to focus on improving the mobile experience. And having a mobile-first strategy is, I think, really key for delighting customers. And you showed some research on that already, but the report itself also noted that the research found some consumers that are using mobile apps twice as often as mobile web browsing for routine interactions, and apps were consistently more likely to delight. And so mobile's the way more and more consumers want to engage, and we're hearing that every day, and that companies that can turn traditionally long processes into just minutes or seconds and that are focused on the customer experience at every touch point along the journey are going to win. And so mobile has some inherent advantages because of the native capabilities. I think about things like using the camera on the devices for taking pictures of information and pre-populating fields so that we don't have to clumsily try to use my thumbs to type everything every time, and using location services to provide contextual experience. And so all of these kinds of things are things that remove friction for customers. Regarding the prediction about Optichannel delivery, I mean, it resonated a lot, the quote about beyond multi-channel, which was, there's different definitions that people have, but delivery on multiple platforms, or Omni-Channel, delivery through all channels similarly. There's Optichannel experience, delivers solutions using the best or optimum channel based on the customer's need and preferred channel. And so I think Kony certainly has delivered multi-channel and omni-channel solutions to our customers. And we even have an SLA on when our mobile app development platform is going to support like new operating systems as they come out, or devices such as wearables as people like Apple and Samsung add those. But helping our customers optimize across channels based on their needs and preferences is something we really look forward to working closely with banks and on in the coming years. So I think that one's one that we think is going to play out. And so I want to spend a couple minutes. I think Kony's approach to our retail banking solution positions us well for taking advantage of some of the predictions in the latest report. And there's a lot of companies who offer mobile banking solutions. So traditionally, a lot of apps are built taking a systems of record approach, meaning they're built with the back end in mind first. So looking at what data is available in the system of record and then making an app or front end interface to get to that data. So Kony takes a very different approach, and we use a systems of engagement approach, meaning that we start, like the starting point is consumer first. And so we create a unified user experience that seamlessly integrates siloed back-end systems. And by keeping our focus on the exceptional user experience first, our customers are free to innovate and aren't really limited by those who maybe take a back-end first approach. And I think that that's changing across the industry, and people are recognizing that. Trying to start with the customer first approach, but it's going to take some time for people to adapt. And so if I look at how that's enabled, the Kony mobility platform is really at the heart of delivering on this approach. And our mobile middleware services integrate with various systems of record, and it's an open platform. So clients can use whatever third-party tools or native SDKs they want to develop the front end. But if they don't want to do development themselves, like we hear from a lot of mid-sized or smaller banks or credit unions or banking associations that don't want to do the development, or want simplified tools, we also offer front-end tools that make it easy to design and build great user interfaces. And so there's a lot of choices depending on what the bank's unique needs are. And for retail banking, we also provide an app accelerator that can speed implementation time. It gives like basic core functionality, and the finished app can easily be deployed across various devices, phones, tablets, desktop, web, wearables. And so we cover all of those types of channels as well. And we've taken a look at our customer first approach and briefly at the Kony mobility platform. And I also wanted to share just a little bit about our solution for retail banking. And so one of the most frequent challenges that we hear about from bank prospects is that their current mobile banking app isn't flexible enough, or they're not able to innovate quickly, and that puts them in a situation where they feel like they're just having a Me Too app that doesn't allow them to differentiate from the competition. And so Kony's solution provides our clients with the latest functionality around account and user management, P2P, mobile deposit, and you can take a look at the different areas that we cover. But the key is that it's built on the Kony platform. And so not only can you get the base functionality, but you're able to adapt quickly. And a lot of folks have roadmaps that may be 12 months before they get things like Touch ID and other aspects. But with the platform, you're able to add functionality quickly. And so our front-end tools also allow customization of the user experience and the interface so that the app's differentiated and you can cater it to your own brand and processes of your own bank. And so there's a lot in it. Definitely we can share more detail. If you guys are interested, reach out to us. And here's a few ways to stay in touch. So you can find some information online and definitely, through the other places as well. So why don't we go ahead and move on to Q&A. I know that we've just got a few minutes left, so want to take some questions.
All right. Great. Thank you both for your great presentations there. We'll kick off with the Q&A session now. If you haven't already, you can submit your questions through the Q&A panel that you have available to you. So please feel free to submit your questions there for our speakers. We'll start off here with the first one that we have. I think this is for both of you. Do you see small banks and credit unions partnering with fintech startups or only the big guys?
Steve, you want to take that, or?
Yeah, sure. I think that it definitely is beyond just the big guys now. I think that a lot of the fintech folks are going to partner with the mid-sized banks. The functionality that the consumers are asking for and really want, and that the fintech folks enable, is similar in a lot of times. And I think converging some of that through the mobile app, things like new account open or, location-based services and, anything from that realm are all things that can happen for mid-sized banks too, and I think that adds a lot of value. Jim, do you want to add anything to that?
Yeah, I think we've seen some of the small banks already partner with fintechs around crowdsourced lending and investments, and I think we're going to see more of that. Also, I think we may see some of the smaller organizations or some of the bigger suppliers, the solution providers that are industry-wide, making some of the partnerships available to smaller banks as part of their services. So it may go through another partner, but I think you're going to have some of the access to some of the things as well.
Great. All right, we have our next question here, and this one's towards Jim. In many cases, the legacy banks feel the fintechs/challengers have an unfair advantage, and they aren't held to the same regulations. Don't they have to follow the same rules?
That's a good question. It really depends on the product and what the solution is. I think what's interesting is many of the fintechs are what I'll call skirting the rules because they're not providing a full set of services. So when you look at a Move-In or a Simple, they're built on a prepaid debit card platform. So there's a lot more flexibility with that. They also have brand new technology. I think when we look at overall the ability to answer the digital banking call, the need to address the needs of a digital consumer, the biggest challenge is not regulations. The biggest challenges are our legacy systems. It's the systems that were built and they're now being put together with chicken wire and duct tape to serve the digital needs. And I get more concerned about that. But I think, when you're talking about some of these technologies, when you look at some of the things that are being done in the payments world to simplify the consumer's ability to make payments, those things can be done by virtually any bank. We just have to find a way to do it with our current technology base. And so I'm moving around the question a little bit, but I think, yes, they aren't held to the exact same standard because they're not offering the full line of services. And that's a challenge. Now, on the other hand, they also don't have scale. They don't have the consumer base. They don't have the data knowledge and the insight that we do on our consumers. So while they may seem to have an advantage from the perspective of not having the same robust regulatory standard that they have to live to, they don't have the consumer base either. They don't have the product line. And that's why I'm believing that if you took a wheel and you put the banks in the center, I think what we're going to see is the small fintech solutions being offered through traditional banks to their customer base is a better way to implement different services. This will not only lower costs, but it'll make it so that your innovation track gets greater and greater. The key is to not let this all get out of hand, because what will happen is some of these fintech firms are doing their jobs very well, especially on the lending side. If we don't answer the call and build solutions that are comparable, eventually they will get scale and they will have customer knowledge, and we'll lose the one major advantage the legacy banking industry has, which is the insight into our customer base.
Great. Next question here is, what do you think, or how do you think security things will be improved, such as fingerprints on your phone?
I can start on that one, and then Jim, you can add maybe. I think that there's a lot of improvements in security that need to happen. Some things, a lot of implementations of like fingerprint and touch ID that we've seen so far utilize the device's ID. So if your fingerprint is captured on your phone's memory for other things, that's what we're using to access the financial institution's app. And I think that some folks think that that's not secure enough, and so they're looking at other ways to isolate it just to the app. I also think that more multi-factor authentication methods are being implemented, so not just fingerprint, but for select things like large transactions, like large dollar value transactions that you also enter a mobile PIN. And so I think there's a lot of different security things that folks are looking at, and even down to the transaction type level, and isolating it that way.
Yeah, I think we're going to see a lot of different ways of authentication. This is a big deal, but it also is the door opener to overall digital payments, where when there's a major breach and when the consumer starts to realize that the phone and some of the technology that they carry around with them can have much better security, it's that it's another step. It's really a balancing act between simplicity and security. And I think, as Steve mentioned, the Touch ID, the biometrics, they're, in China, they're doing a scan of the faces. There's a lot of different answers to this. I think what's key is that we have to keep it simple. I think this is going to be a major area of adjustment this year. And I know a lot of banks are testing a lot of different things, but I think we need to make the security happen not only on the device level, but also on the account level, without making the process more difficult. It's one of those give and takes. I mean, we get rid of needing our passwords on certain things that we like balances, but we should keep even more security when it comes to payments.
Great. I have another question here. I think this one could be towards both of you. Could you comment on what are good examples of mobile banks challenging the status quo?
I think, overall you're looking at the move-ins, you're looking at the simples, you're looking at Bank Mobile, which is actually built on a traditional bank platform, but a brand new one. And then you want to go overseas, and I think you want to look at organizations like MBank, and we can talk about how these banks have different advantages. Poland, the regulations aren't as strict, and also most of the banks have much newer banking systems because the formalization of their banking industry didn't happen until the 1980s and 90s. So comparatively speaking, they have a much better technology platform. But I think you look at organizations like MBank, you look at the challenger banks, you look at Commercial Bank of Australia, Commonwealth Bank of Australia. These are companies out there, as far as an innovation firm, you want to look at these organizations that are taking traditional platforms and really doing an amazing job digitizing. So it's really shopping around. Whoever asked that question, if they want to reach out to me, I'll give them Lacacia. I almost lost their name. Lacacia is a great example of a traditional bank that's just doing amazing things from a innovation from a digital perspective.
Awesome. And we'll squeeze in one last question before we hit the top of the hour. And this one is towards you, Steve. Which one of the trends and predictions aligns most with Kony's strengths?
Yeah, I think a lot of them align to Kony's strengths. If I had to pick one, I think it's removing friction from the customer journey. And I think that's something that I feel like the folks at Kony, from development all the way through marketing, have a real emphasis and focus on every day. And we're looking for new ways all the time, whether it's partnering through some other fintechs to enable some technologies or building in-house, but just looking at what we can do to make things more simple, as Jim kind of called out earlier, is simplifying the experience for the consumers.
Great. All right. Thank you, Jim and Steve, for your insightful presentations today. We very much appreciate it. If you're interested in finding out more about this, feel free to contact Kony. You can email us at info@kony.com. You can go on our website at www.kony.com, and you can reach out to us directly on Twitter at Kony. And with that, today's webinar comes to an end. Thank you all for attending today's webinar, and have a good rest of your day.